Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thanks so much for joining me today. Got a lot to talk about today. The market yesterday really wired up to be a buyer yesterday after 2 good days of trading. We actually mapped out the difference between short covering rally and fresh buying coming in. All of the hourly charts in the sectors yesterday formed really clean bull flags on the 60-minute chart. So we're going to take a look at those in a minute. Obviously, we're going to talk about Bitcoin today. We got a Bitcoin price prediction today. We're going to set a profit target. We're going to go through the actual order flow that Bitcoin is trading in right now, determine the optimal entry point. But more importantly, we're going to take a look to the left and see what happened when Bitcoin rallied and when was the right time to get in and how to get in, which is a big thing. We're also going to go over a couple of different sectors today. Mostly we're going to focus on basic materials today. Energy stocks and energy sector is on fire right now, no pun intended. They need to cool off a little bit. I guess that's really the only way to put it. We've been looking to buy them. There is some pretty good optimal entries about 7-8 days ago. Now they've used up what they normally do. So now we're waiting for a pause. So remember, we make our money during the push and the pause. We just had a vicious push to the upside. Quite a few of them have extended a lot. And now we're looking for the next pause. We're also going to talk about 3 stocks that had earnings that we're going to discuss. We're also going to get into one stock that we haven't traded in a while that's resting comfortably at a breakout level. And then we're going to talk about 2 stocks that are potential long-term bearish reversals to the upside based on reading the tape. It's a pretty interesting conversation we're going to have because we don't talk about bottom picking. We don't recommend bottom picking. We don't feel that bottom picking at all is the right thing to do. There's too much money to be made in the middle when it's obvious. However, there's 2 instances that I want to bring to your attention because reading the tape and understanding how to read the tape is critical to understanding how to get that optimal entry. And you'll end up getting better entries before you read it on the headlines. Plus, we're going to talk about a book. And we're going to talk about a video that I made yesterday that you absolutely positively need to watch, especially if you're day trading. I promise today's going to be a good one. So stick around. We'll be back in just 1 second. Okay, so thank you everybody for joining me today. I really appreciate it. We're going to talk about a lot of stock picks that are potential buys today. Airline stocks are perking up a little bit. They've been resting comfortably at a big level that we've been watching. So obviously everything we discuss here is for educational purposes. It's up to you to make the final decision. I hope that I can help you make better decisions. We're actually going to start out with Bitcoin before we go over to the other stuff. But I want to point you to a video that I did yesterday because I think it's that important for you to watch. So I'm actually going to show you the cover of the video and right there. Okay. Big warning. This video changes everything. So what does that mean? The video is only 5 minutes, maybe just below 5 minutes. I walk you through in that 5-minute window everything that I do for setting up my screen because we get a lot of questions about order flow and tape reading and optimal entry and all of that kind of stuff. But the video the link is in the description. It's under day trading, I believe. Day trading strategies you must know or something like that. So scroll below the video. You'll see the link. 5 minutes. Here's the big thing in that video that is why it's a must watch. I keep pointing. Why it's a must watch. So if you could visualize right now, you're in a trade and you're not 100% sure whether or not it moved in your favor. And it's kind of dancing around a little bit, and you're not 100% sure. Should I book profits on the stock that you bought? Or should you give that stock more room, maybe even buy more stock because you have an anticipation of the thing continuing and you want to have a really big winner? What I showed you in that video, and I'm going to shock you again. We'll pull that right back up on the screen. All right. I am not kidding when I say this video changes everything. And here's why. If you could visualize the next trade that you're in, having absolute conviction that smart money is piling into the market, or smart money is piling out of the market, or right now it's about as neutral as you can get. You see red, green, and that kind of stuff all over the place. What I'm going to show you in that video, and again, it's only 5 minutes. Just click below and watch. It's only 5 minutes. Watch it after this. Is it gives you a crystal clear, we're actually calling it the market thermometer, where you're understanding the temperature of the market in a much deeper way than just simply looking at the indices. Now, we watch the indices, we watch the sectors. All of that is critically important. But, and here's the problem, because we kept bringing this question up in our community. You got Apple and a couple of other stocks that are so heavily weighted in the indices that the indices can have what might be perceived as a deceiving strength or weakness, simply because one giant stock that has a big weight in that index is pushing it around. So what we show you in that video is how to literally set up your screens, which stocks to put in your screens, so you know exactly how much conviction you should have on a trade. Now, here's where it makes the biggest difference. If you could imagine your next position, you're in the position and you look at the screen as I teach it to you in that video, and you see that everything on that screen is saying, don't touch your keys, get away from your keyboard, let this trade unfold, because you got a good one right now, and the rest of the market is confirming that. Now, the other side of that is you have a position on it, moves in your favor, and you look at that same screen, and at that moment, you start to see that although the market is still a little bullish, there's less selling going on, not necessarily profit taking, but less selling. So what does that mean? You scale up, you move up your trailing stop loss, maybe you even get out of it a little bit. Either way, you will know exactly what's going on in the bigger picture in a much deeper way, like all professional traders do. And hopefully I could aspire, we can get up to that point where you're acting and thinking like a pro. You will have the utmost confidence that you're exiting and entering your trades at the right time, simply because you understand how to read that market thermometer. And I give you everything. It's only 5 minutes, okay? And the video's in the description. I keep talking about it because it's advanced, but if you get it, everything changes. I'm not kidding you, all right? So we're going to hop on over to Bitcoin. We're going to take a look at Bitcoin. And the biggest thing I want to talk about Bitcoin is the speed with which Bitcoin moves. That's really the biggest thing that we want to get across. Okay. Now, actually, you know what? I'm actually going to go over to the continuous contract. I'm not going to look at the future. So here's the biggest thing that I want to get across in Bitcoin. All right. Last week we had mentioned that this level was big, and you can see it mattered here, right? It mattered here. 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 Here's the big thing I want to get across. We have a lot of new members that come into the boot camp, a lot of members that come into our swing trade community, and they need like this really deep, definitive definition of what support and resistance means. Support and resistance, to keep it in the most actionable way, is support and resistance means where did buyers or sellers do something significant last time? Where did they actually put their money where their mouth was, and how long did they do it? So if we're looking at Bitcoin, if you remember a few days ago, we actually pointed this price out and we said it stopped, stop, break out, stop, 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 stop again. So does that mean that you should have bid for Bitcoin on the way down? Because you could clearly see that Bitcoin is still in a bearish move. No, obviously, we just talked about we're not really looking to buy when something's going down. But again, advanced reading the tape, you need to anticipate where buyers or sellers are going to do something, because that's the price they did last time. Now, sometimes market conditions change, right? Something that in a company might have changed from a year ago to now. Earnings, Bitcoin's obviously not a company, but price leaves clues. Now, here's the thing. We talked about that level. We said this is a significant level, but we weren't buying it into that level. Now, it stopped exactly at the level that we talked about. So we'll zoom this out a little bit again so you can see it just a little bit more clear, right at the level. And we drew this over here while it was still on the way down. We're not guessing. We're not predicting. We're just paying attention to the prices that matter. Now, here's where you're going to earn your stripes as a trader. You need to understand your risk and the potential reward that justifies that risk. So now, because we stopped going down and that significant level, the buyer stepped back up again and stopped it. Now we actually know what our risk point is. The only other question right now is, when do you get in, and what is the most likely, that's a big thing, most likely potential profit on this trade? Because remember, the reason we buy stocks, the reason we'll be looking to buy crypto, is because there's a high likelihood of us making money. So in the way that we teach it, there's your initial risk and your initial profit target. Now, that doesn't mean the initial profit target is all that you're trying to make on the trade. It's the amount of positive price action that you're looking for to justify your stop loss. So in other words, if I'm risking $500, do I believe I could make at least $1,500? So we use that, the standard 3-to-1. If you're risking $500 and you think based on how much it's moved recently, the most you could make is 500, well, that's 1-to-1, and that's going to make you a break-even trader. So even just doing something as simple as that will keep you out of trades that don't make sense, because 1-to-1, that's not what you want, or make you trade with confidence because you see the risk, you see the likely profit potential. Now, the big thing I want to talk about in Bitcoin is Bitcoin moves fast. And I'm going to show you this on the chart. This is one of the most interesting things. If we work our way over, going all the way back to the beginning of 2021, you had this move up and a pullback. Now, generally speaking, you probably heard us talk about when stocks change trend and they go into a box, that whether they go up and sideways or go down and sideways, it usually becomes pretty obvious. And that's really more on the stock side. When we're looking to buy stocks, that's generally what happens. Bitcoin reacts a little bit differently, which is why it's so important to understand that level. So I want to point this out because price leaves clues, but that means that you need to script what you plan to do well before you need to do it. And that's, again, I keep talking about it all the time. That's where trading becomes easy, because you know what you're going to do beforehand. And that's where you reduce all that stress, because you're like, oh no, it did exactly what I thought. Now I just have to place the order. All right. Now, here's what I want you to be aware of. Big move to the upside, pullback, right? It did not go into a box. It didn't go sideways, dance around, and then go back up. It just blasted through this here. We went down again and blasted through that and didn't look back. We went down again and blasted through that. We went down again, and now we're about to cross above. So what does that mean for the next trade in Bitcoin? Well, we know the risk, right? The risk is right around that 40,000 level. So that's the risk to the downside. So what is the upside? Generally speaking, again, I learned this a long, long time ago, and it's a very simple way of setting profit targets. Generally speaking, and you can do this on a 5-minute chart, or you can do it on a daily chart. All you're looking for is an obvious trend with profit potential. So again, it could be something over 2 hours if you're day trading stocks, you're buying and selling stocks as a day trader, or in Bitcoin a little bit longer, in Bitcoin example, a little bit longer. So what I'll generally do is I'll take that recent move and predict, forecast the next likely move is if it's a real move. In other words, if I put on the risk and I'm actually expecting it to take off, what is the most likely area where I would expect price to go first? So remember, where I expect it to go first is not where I'm hoping it to go. That's the minimum place I need it to go to justify taking the risk. So please do me a favor. This is really, really important. Write down on a Post-it pad while we're talking about it right now, justifying the risk. It's everything. You will be shocked at how many trades you stop yourself from taking because you can't justify the risk. You'll be shocked. And I hope that you come back in a future live stream that we do, and you tell me, you know what, I was looking at a trade, I was thinking about taking it, and I could have made $20, but the risk was $15, and it just didn't make sense. Those little decisions are going to help you keep money in your pocket and then only take trades that have the best chance of making money. So what does that all have to do with Bitcoin, right? So we have this bigger move from all-time highs, that big double top, pulled back. Everybody's scared at that 40,000. The next level is 30, right? But we held the bid. So now we know the downside. So what we're going to do now is we're going to look at what I use is a very simple tool, and it's Fibonacci retracement. I keep it as simple as possible, and you go from where the trend started to where the trend ended, or where you believe it ended. And then generally speaking, let me actually bring this in here. We're going to duplicate that. 50% is generally speaking the minimum initial profit target that I'm looking. So if we're looking right now, we're looking at 40, a little over 40 to 54 to 55. So that's how I mapped out the trade. Now, there's a whole bunch of different things going on here in Bitcoin. There's the speed, which we just looked at with when it goes down and reverses, it's quick. So that's why I spent so much time last week and this week talking about the risk and where it's potentially going to see buyers step back up and hold that price. And it did. not predicting. I'm not forecasting. There's no magic to it. What the magic is actually doing the work after hours and going through charts and charts and charts and spotting support and resistance that you can lean on, that you can trust. Look to the left, price leaves clues. This is a part of tape reading. This is a part of order flow. So in this instance here, if you want, you can take a snapshot of this. I'm going to make it big for you. You can see now we held the bid at that price that mattered. So now, based on how fast it moves, we can reasonably expect one of these types of candles. So now we need to make decisions on, are we going to wait, or do we define our risk and simply say that the break of this trend would end up being our entry? Now, what's kind of cool about this is if we zoom this out a little bit, you can see it's actually consolidating here, resting comfortably, waiting for us to put that move on and have this entry right up to this point. Now, here's the thing that I just want to discuss, because I want to give you a trade that we talked about yesterday, which was Morgan Stanley, and it did not do what we were looking for it to do. And I want to talk about that in a big way, because there's two different things that you need to keep in mind, which I have to be honest with you, I hope this is easily the biggest thing that I am giving you as education in these videos, because there's retail trading and then there's thinking like a pro. Retail traders try and be right or wrong, or if a trade didn't make money, that was a bad trade. If a trade did make money, that was a good trade. That's bullshit. I have to be honest with you, because you could watch a stock getting absolutely crushed. You guess the bottom and the thing happens to turn around, and now you think that buying stocks that are falling out of bed is a good idea. That's not a good idea. You can actually be averaging down, God forbid, into a bad position. That stock finally turns around. You almost blew your account up. It finally comes back. And now you say it was a good trade because you made money on the trade. That's also BS. Active professional traders script out and only take risk, only accept risk based on the odds, the likelihood, the probability of hitting that initial profit target. So when you're looking at an idea and you're assessing it, you are basically looking at it and saying, if I accept this risk, is there a good chance I'm going to hit that minimum profit target? Now, here's the thing, and this is the second part that a lot of people don't take into consideration. You only say, okay, I built this argument. I can't wait for this thing to move in my favor. And it moves up a little bit. And then moves up a little bit more and then goes back down in the other direction, and you freeze. And all of a sudden, one trade becomes this nightmare because you only planned to make money and you didn't plan to manage risk. So what does that have to do with Bitcoin? Well, I'm going to talk about Bitcoin right now and the trade that we just outlined. And I'm going to talk about a Morgan Stanley trade yesterday, one of my top picks yesterday that did the exact opposite of what I thought. I didn't get in. It didn't trigger my price. We had the buy stop just beyond the all-time highs and everything. But here's the thing. I didn't get in because I didn't hit my price. But we talked this through the community. Real breakouts follow through. Real trades follow through. And again, this is another writer downer, okay? It's not the losing trades that are keeping you broke. I want to say that again. It's not the losing trades that are keeping you broke. It's not the losing trades that are the reason that you're not achieving the level of trading success when you buy and sell stocks that you believe. If you manage the downside, you should be able to learn that in a heartbeat. You should be able to learn that placing 5 trades and understanding that I got to get out of this thing. I expected something happening and it's not working out. What is holding you back is not understanding how to make more on your winners. It's the exit of the profitable trade that will make the difference between massive, unbelievable success in trading from making money 10 days in a row, giving it all back on one trade, making money 5 days in a row, giving it all back on one trade. This is the difference between being a happy, successful trader who has the absolute conviction to set profit targets and then understand how to build the odds of that trade. So why am I talking about all this? We just built an argument in Bitcoin. We're basically looking at Bitcoin and saying over 44,000, just as an example, would be the entry in this case. A stop loss below 40, and we have the target up at 54. The whole trade is mapped out. If it follows through, great. If I put the trade on, my first thing in my mind is give me a head start so I can breathe. Maybe we consider adding to it. If it pushes up, gets us into the trade, reverses, and goes down, that's trading. That's a part of trading. It doesn't matter if every trade follows through perfectly. Trading is a business. Businesses have expenses. If you get into the trade, any trade, it could be this Bitcoin trade, it could be any position. I'm actually going to show you the Morgan Stanley trade from yesterday because it's pretty interesting, right? So if we looked at it yesterday and we take out yesterday, that was what it looked like yesterday. We were resting right in front of all-time highs. We mentioned that going all the way back. I set the alert over here. This entire time, it didn't unfold. And then I'll show you inside of the community where we called the trade out, which was, let me just pull it up. I want to show you right here. So this was the trade you can see yesterday at 9:30 in the morning. Morgan Stanley 106.50 buy stop. Half position size on initial entry. You can see, again, if you're not in our swing trade or boot camp, you can see I outline everything. I give the stop loss, the dollar risk, the initial shares, where we're adding. And this is big here. Initial profit target, the ultimate gain, and a whole bunch of other things, right? So we had the outline of the trade on yesterday, and here's what it did. It went up and did exactly the opposite of what I could possibly have wanted it to do. You can see we didn't get filled. It just barely got up there, which is another lesson. You don't want to put your buy and sell stops right at that spot. But here's the thing. If we put that trade on and I build this argument, financials are getting strong. They're looking awesome. The XLF broke out above the 50, bullish gaps, new levels. All the other financial stocks looking the same way. Big momentum moves, all-time highs, Morgan Stanley. Everything is lining up. If I put that trade on, it rallies up, comes back, and doesn't do what I thought, I already have scripted what I'm going to do. You know what the first thing in my mind is? Actually, let's take a step back. The first thing in the struggling trader's mind is bad trade. This stinks. Maybe I'll average into it. I'm not getting out. I'm right. The market's wrong. You know what the first thing in my mind is? All right, take the loss. Where am I going to make it back? Now, losing trades, yeah, they suck. Let's all admit it. Nobody wants to have a losing trade. But if you think you're going to run a business without any business expenses, you're out of your mind. You are literally out of your mind if you think you're going to trade and never have losses. The opposite of that is if you plan and expect, even on good ideas, there's a chance of losing money, and you're okay with the dollar amount prior to the trade because you're willing to accept that risk in exchange for the potential profit. It's the amount of trades you make over time that make you money, not each individual trade. And don't give me this BS about win-loss percentage. Win-loss percentage is the most misunderstood, misused piece of garbage in trading because you could tell me you have a 90% win-loss percentage and give it all back on one trade. So don't talk to me about win-loss percentage. The secret to trading is understanding how and when to make bigger money on your winners, assuming you understand first how to set your initial profit targets. So again, that conviction level is in that video that I asked everybody to watch after this one. The link is in the description. It says day trading stuff you ought to know. All right. So that's how I mapped out the Bitcoin trade for today. Over that 44,000, stop below 40, looking for 54. Follows through. Awesome. We scripted it out. If it doesn't follow through, we accepted the risk. First thing in our mind is now we're going to look at the next trade, and that's how we're going to manage every trade that we put on. I hope that this is hitting home for you because I know there's a lot of you out there that are like, yeah, that's me. I make money 4 days in a row and I give it all back on the 5th. Or I print money, and one trade I blow it and it comes back. As long as you accept risk and you know that your next skill is understanding how to make more on your winners, that's the magic keys to the kingdom. And I promise you, you will wake up one day and say, I was making trading way too hard. It's not about all of these indicators. It's about understanding how to read the order flow, understanding how to read the tape, and understanding when there's a lot of money doing the same thing, which means you have more on the table you could make on a trade, or thinking about putting on a trade or being in a trade, seeing that picture change and being, wait a minute, now I'm in stop and go traffic. I need to make a decision. When you understand how to make those decisions, trading becomes fun again. I'm telling you, trading becomes fun again. I just wanted to do something because I promised before a book. I'm always asked about what books have influenced me a lot. And if you haven't seen this book, I'll put it up here for you. Linda Raschke and Larry Connors wrote this book. It's called Street Smarts. I bought this book in 1995, and it was $195 in 1995. pretty big investment at that time. I'm pretty sure you can get it on Amazon, but I'm always asked which books influenced. This book was a very big influence to me, especially Linda Raschke. She's a very big, good trader. All right, so I want to work our way over into some ideas, obviously outside of Bitcoin, but I really wanted to drill that point home because you have to look in the mirror and ask yourself, what part of trading am I missing? What part of trading is not working for me? What part of trading is holding me back? You need to spend that spare time with a notepad and start writing that stuff down, because as soon as you take that time in your spare time, you will understand, all right, stop doing that. And as soon as you stop doing it, you immediately stop losing as much and you start to become break even. Once you start to become break even, then the other side of the trade is what I just talked about, understanding how to make more in your winner. So again, the video I'm telling you to watch, it's in the description. It's only 5 minutes. It's day trading stuff that you ought to know. All right. So I want to walk over. I want to talk about a couple of things that are going on this morning that are kind of important. Lennar, which we were actually trading yesterday. We actually had a position on yesterday, kind of was holding the bid, and they raised the dividend by 50 cents. Now, why is that important? Well, KBH also reported earnings today, and they're actually both up. So let's actually take a look at Lennar and the bigger picture of Lennar. What's interesting about Lennar is it got hammered after earnings, rallied back up to resistance, and now it's much, much higher this morning. So Lennar and KBH. So what does that mean? Pete, this is awesome. What the heck does that mean? Why are we talking about that? If you watch that video, a huge part of having conviction in your ideas. Remember, we talk about the stock market power pyramid. There's the bottom of the pyramid, the very foundation, the biggest foundation, the Dow, the NASDAQ, and the S&P. Just above that is sectors, just above that industry groups, and then you have individual stocks. So right now we're talking about the industry group. We're talking about home builder stocks. If these stocks are starting to light up, if there's raising the dividend, earnings are beating, do you think you should start paying attention to that? So when you watch that video, you'll see you need to have them in a certain list to have conviction. If money is flowing into that area right now, you need to determine, am I day trading? Am I swing trading? What time frame has that money been allocated? So you bet your bottom dollar I'm going to be paying attention to them today. So Lennar and KBH. Next one we're going to keep an eye on today is Delta. Delta reported today. Forecast came out, so we're going to take a look at that right now. And also one of the things I was talking about with Delta is this level right here with the 50-period moving average is pretty much the bigger line in the sand that I'm watching. But now you can see it's actually up almost 2%. But here's the thing. Remember the price action where I keep telling you it needs to be simple, repeatable, and something you have conviction in. If you're watching everything we do every day, it's order flow, right? It's order flow and tape reading. What the heck is tape reading? Tape reading means that we're looking for a push and a pause, a push and a pause. Remember, write this down. We make money during the push. We manage risk during the pause. So now Delta and a couple of other airlines have had some good news lately. Not their inventory, their capacity is going up a little bit despite what's going on with the variant in the bigger picture. So now we've actually pushed, paused, pushed, paused, pushed, and now we've paused. So what's the next trade? Well, we're looking for this at least to get up to 45 and then a bigger move looking for it to get up to 51. Do these stocks fly? Do these stocks fly? The airline stocks? No pun intended there. They're not fast movers, but if the story behind it is changing, this is when you say, you know what? It's still kind of the first sign of the move, maybe the first sign of reversal. Pete talked about it yesterday. First sign of a reversal means first shares. First shares means initial position size, which means a little bit less position size if it's like this, the first sign of it heading back in the opposite direction. So the next one we want to talk about is Taiwan Semiconductor. They also reported and actually poised for a breakout after earnings beat. So we actually have been watching this one, had a monster gap here, held the gap, and now it's rallying again. But here's the big thing. You can see this is the level that it's been having a really hard time getting through basically since March. We're all the way up at 138 and change right now, which takes us right up to this level. Very similar to a lot of other stocks that we're seeing that have broken out and pulled back. Now, how far are we from the optimal entry? Well, the optimal entry is all the way down here. Let's zoom that out a little bit right here. You had this vicious move to the upside, bullish gap, right? Here's another thing. You must be monitoring two things during the day when you do your game planning at the end of the day. 20-day breakouts, 20-day breakdowns, and bullish gaps and bearish gaps. TSM had 2 vicious bullish gaps last week. So that now you're doing your scanning. You have to sit back in your seat and say, wow, this is a pretty interesting idea. If it pushes up on those 2 bullish gaps, I want to pay attention to the next push and pause. So we just rallied higher on 2 bullish gaps. We pulled back and it gave us a perfect optimal entry and now traded into 2 more bullish gaps and earnings. So this is something that's on my radar now because it's active. It has institutional attention. Now, does that mean I'm just going in with 2 fists today and buying TSM? No, earnings were pretty good, but it's well beyond the optimal entry. So because it's beyond the optimal entry, which again, I'll just point that out. Okay, let me actually just make this a little bit bigger, right? Push and a pause, bullish gap, big volume, bullish gap, pullback, optimal entry, bullish gap, and now another bullish gap. 3 consecutive bullish gaps. So go back to what I said before. If I'm choosing to accept risk and how much risk I choose, what are the odds of me hitting my profit target? What are the odds of the next move? Remember, push and a pause. What are the odds of the next push if I buy today? Well, the earnings catalyst is pretty good, but this makes the 3rd consecutive bullish gap into where sellers shoved the stock down last time. So if I'm looking to put on a first piece of TSM today, it's not going to be my full share size simply because it's too far beyond the optimal entry. What is the optimal entry? It's what does it normally do and where is it right now? So if it normally does 10 and right now it's at 9.5, yeah, the catalyst off earnings is pretty darn good, but I'm not going in with full share size simply because we're too far from the optimal entry. All right. I want to talk about 2 other ones, and I just want to get into this in a lot of detail because, look, I want to make this clear. I'm not telling anybody to pick a bottom. What I'm about to show you and talk about is a lesson in tape reading, a lesson in the 4 phases of price action. So I just want to say that very clearly. But it's an exciting one. It's something that's going on in price action right now that has me sitting up in my seat and saying, okay, this thing is changing. Somebody with money is stepping up and doing something. I want to say, I'm not saying bottom fish. I want to get that clear because somebody watches like 5 seconds of the video and then they misquote me. We're going to talk about net and we're going to talk about hood, which we talked about hood about 7-8 days ago. And we're going to see the same exact thing that's unfolding in net right now. If you could do me a favor, I would really appreciate it. If you're finding some value in these videos, please do me a favor, smash that like button and hit subscribe. It'll let me know that you're enjoying these kind of videos as well. Okay, so what I want to talk about here, we're going to go over it. First, we talked about hood last week, right? And you can see the big bearish line is still pointing to the downside. But what we started to point out was this. The volume was starting to increase. So what does that mean? Does that mean, oh my gosh, we noticed something change on the tape, now we get in there and start buying it? No, we need some feedback. If you could think about that volume explosion where it's churning as an alert, something for you to say, wow, something in the tape changed. If you're a Star Wars fan, you'd be like, oh, I sense a disturbance in the force. In this case here, selling pressure looks like they're hammering it, right? But when they start hammering it and it stops going down, somebody said, this price is interesting to me. Sellers keep coming in and the guy, girl, whoever it happens to be is still sitting there on the bid. We're seeing that in hood. So now hood is in my watch list. Hood is in my tracking journal. Now I have a really good one for you. If we take a look and we look at net, which has a $120 haircut over the last few months, right? Boom, right? But let's take a look at that. Look at this and the churning price. Let me actually make that a little bit bigger for you. Okay, 220, finding support right at 100. Now that's interesting, right? This is more interesting to me. Right there is more interesting to me. This churning rally, heavy volume, there's a pretty darn good chance right now that net is bottoming out, and not a coincidence that it stopped right at $100. Now, again, am I saying bottom pick? No, that's not what I'm saying. What I'm saying is there's a disturbance in the force. Buyers stepped in at $100 after the stock went down 120. It's still in bearish order flow, but now it's on my radar. So we have this big push to the downside. I'm going to map out because I want to talk about this now before it happens, okay? Which is kind of cool because this is what I mean by scripting. So we have this move to the downside. This is where it went. And right here, we broke the trend. So what we would normally do now is we would do this and this. I'm actually going to move this out of the way just to make it super clear. And that. So right now, it's technically in a box, right? Take a snapshot of that. It's in a box. So while it's in the box, there's nothing to do. But the fact that we got this accumulation and sideways is a big deal. And this is what separates somebody from reacting after you read the headline 2 weeks from now when you're going to read, wow, net surging on big volume. You and I are spotting this before that happened because first we're like, all right, bearish order flow, nothing to do yet. But running your nightly scans, which has to include volume, has to include double normal volume, which is one of the top scans I run every night. You start to notice this thing. You sit up and you see it. I'm like, okay, that's one day. That's interesting. And then you see it in the same scan 2 days in a row, 3 days. We've had double volume in net now 7 days in a row. There's a disturbance in the force. Now I'm going to start watching it. Then it broke out and took out the downtrend, which we happened here. Now it traded yesterday into a bearish reversal, but that's fine. Now we have established what the box is. Only one of two things can happen now. It's going to break out of the box to the upside, and we will have seen that beforehand. And again, first sign of reversal, first position, which means lower position size because we need more feedback. What is that feedback? We're looking for a push and a pause. And during that second push is where we potentially add to a new trade. If it pushes down and takes out the lows, we're not even in the trade because it's stuck in the box and if it goes down again. But I think that there's a pretty good chance that we happen to have spotted a good area right now. So it's going to be fun for us as a community to watch this unfold. All right. I have to head over to our game plan meeting and get ready for that. It starts in a few minutes, actually in about 20 minutes. So have an awesome day, everybody. Please do me a favor. Watch that video on day trading. What doesn't matter if you're day trading or swing trading, because you can actually apply it to the longer term charts as well. The link is in the description to watch that video. I'll post it here as well somewhere. At the end of this video, I could post it for you as well. But get in there and watch it. It's that good. It's a video about having conviction and letting the market tell you where the money is flowing on a moment-by-moment basis. Trust me, it's only 5 minutes, but well worth your time. If you want to join me in the boot camp, click below. There's information about that too. So please do me a favor, smash that like button, hit subscribe, and I'll speak to you soon. Have an awesome day, everybody. Thank you so much for joining me. I really, really appreciate it. Take care now.